Hey, good afternoon, everybody. We're back in action on this Monday, September 2nd. Hope everybody had a great holiday weekend. Summer's pretty much over at this point. We got the head traders back on their desks, hedge fund managers back at their desks, relieving the junior traders. Time to make some bigger decisions. We expect some pretty good volatility over the next 6 months to a year. Those are the same sentiments from Goldman Sachs, which I'm sure you know is one of the largest broker-dealers / hedge funds that's out there. Some great analysts there. Also from, who else? From Mohammed Al-Arian, one of the founders of PIMCO. He expects higher volatility over the next 6 months to a year. And who's the other person I'm thinking? They made the comments last week. He manages a big hedge fund. I can't remember his name right now offhand. But he expects much more volatility going forward. Now that summer's over, we've had extremely low volatility. As you know, there was quite a bit of low volatility heading into summer. It only got worse during the months of July and August. But that's over with. Fed is unwinding their QE. Should be completely done either sometime in October, beginning of November. Markets might start to really concentrate more on the economy, on corporate earnings, corporate revenues, the economy, the unemployment rate, the real unemployment rate, not what's being reported by the government. And that could impact currencies in a great deal. And not just here in the States, but worldwide, because you've got the same forces pulling at currencies in Europe, Great Britain, pretty much anything we trade, over in Japan on the yen. So it could be an interesting time going forward. We started off with one trade. We didn't send this out as a signal because it came yesterday afternoon. Markets were slow. We put it on. We know a lot of people were enjoying their holiday, barbecuing, as we were as well. But we threw the one trade on. We set our stops. Never got close to being stopped out. It was a great trade. Unfortunately, we didn't hold it as long as we could have. And you're looking at it here. It was a long in the Swiss franc to Japanese yen. We were long this 113.410. Like I said, didn't get close to being stopped out. Obvious evidence here of this whole consolidation range. So if it did pull down and break these bottoms, we would have been getting out, risking about 30 pips or so. Totally worth. It was a great setup because you got this consolidation. It did try to break out earlier or at the end of last week. We weren't trading. But then it consolidated again, and it was consolidating again in a real tight range yesterday afternoon. So we went long. We figured, all right, we'll risk 30, 35 pips, whatever. If it breaks out of this consolidation, it can run hard. Sure enough, it did run hard. We sold half here, 113.713, picked up 30.3 pips on that half. And then we held half to see what was going to happen because, these tops here could very easily be the stall out area, just like it did here back at the end of last week, and fall back down. Okay, so on the second half, we would be risking a break even on the trade, maybe even risk 10 pips or so below that, and we'd still be ahead of the game. It never pulled back. We set our out up near the figure of 114 even. And that happened overnight while we were not in the office. We got taken out 113.981, just ahead of the figure. Come in the office this morning, it looked like we made the right move because it was still right around the figure area, consolidating there. That's a big psychological level. Anyone that's watched our videos in the past, that big, what we call the figure, even number like that, 114, 115, 116 on this pair. The figure, it's a big psychological level. Thought we had it right. And then boom, later this morning, up until now, until lunchtime, it's run. It actually ran another 40 pips. It's currently up 30 pips, or actually 32 pips from where we got out. 33 pips from where we got out. So do we leave some on the table? Absolutely. Not watching the trade. I think, while we were not in the office here, I think this was really the right move to get out. What we could have done possibly is sell a quarter here and let the other quarter run to see if it breaks through the figure. Maybe that might be getting greedy because it could very easily pull back down that quarter. But plus we're not watching it, so if we set it here, a quarter here and then a quarter higher, knowing with that second quarter that we got to pull back, what if it never gets there and it pulls back, and before you know it, it could turn into a big mess. So I think we made the right move, ultimately made the right move. Would have been nice if we, if this had happened, if this second move happened this morning while we were in the office, would have been great, because then we could have pieced it out more, and picked up even more pips. But in the end, we'll take it. One trade, 43.7 pips. Not the worst thing in the world by any means. Good way to start the month off. Really nice, solid trade. It's been relatively slow this morning as far as any other signals from the algorithm. But, we'll see what happens. If we get a trade later this afternoon, this evening, tomorrow morning, obviously we'll do another video tomorrow. So that's it. If you're trading now, good luck. If you're waiting for any signals, they'll be coming your way as soon as we get them. Have a great rest of your day.